And hello, everyone. Welcome to our program. I am your host, Brian Rogers, and it's great to have you with us for Investor Education Month. We've already dedicated most of October to helping you figure out your unique situation and who you are as an investor or a trader. And you're going to level up your knowledge no matter what your current skills. So we have plenty of free education events throughout the month, so be sure to check them out at our calendar of events. You can just visit www.td.com/IEM for more details. Now, we have a fascinating conversation today coming up that's all about day trading. If you aren't familiar with day trading, it involves the buying and selling of stocks within a single trading day in hopes of earning a quick return. It's a very active approach geared to individuals with a high risk tolerance. Day trading is definitely not for everyone, but it can be highly profitable for those who master it. So we're going to learn all about what it takes to get started with this style and some key lessons to keep in mind along the way. And joining us is Shay, founder of Humbled Trader. She has more than 7 years of experience as a day trader, and she shares her approach to day trading on her very successful YouTube channel and with her community of traders. Shay, thanks for taking the time to chat with us today.
Thank you, Brian. Hello, everyone. Thanks for joining me today.
Yes, I'm really excited to talk to you, Shay. One thing I wanted to mention first, I love the Humbled Trader name. So I've watched many of your videos, and you've even said several times, you see those videos on YouTube where somebody's saying, yeah, you can get this Lamborghini, and then you can also, have these exotic vacations, and it's super easy. Just take you 5 minutes to learn how to be a day trader. And you said it's not like that. It's not that easy. So you were humbled even in the beginning yourself. What made you decide to start the Humbled Trader community and share your experiences day trading?
Well, first of all, when I started Humbled Trader, it was just to share some fun videos online. When I first started, I was doing some trade reviews and kind of what I think the certain stocks are doing in the market, some market sentiment stocks. At the time, I was trading a lot of small cap stocks. So I would just share my thoughts with them, whether they were short squeezes, whether the news is just a pump and dump, or, I was just trying to share some ideas out there. I never knew it was gonna grow this big. Right now the channel is running about 900,000 subscribers, and that's beyond my wildest dream. And thank you to everyone who supported me along the way. But I really just wanted to be out here and sharing some ideas. And selfishly, it was also just because, I wanted like a creative outlet outside of the market. Because, I'm not saying it's easy to make money in trading, but it's very difficult to keep it. So at the time, when I didn't have YouTube, I have all the free time in the world, right? My market closes at, like 1 p.m. here, local time in Vancouver. So I'll trade in the morning. I'll be done around 9 o'clock. And for the rest of the day, I was just throw money back into the market. It was really stupid. So that's why I wanted to create YouTube, to have a creative outlet and also be a distraction for me from the market. So that was my selfish reason for starting the YouTube channel as a side project, as a passion. And, and it grew to be like it is today. And I'm very proud and very thankful to have everyone supporting me and watching me on the channel.
Well, yeah, you've definitely built quite a following, and I know I'm a fan for sure. I've followed quite a few of your videos, and I'm excited to ask you a number of questions. But before we get to that, I just wanted to pull up on the screen and remind our viewers today on how to best navigate this platform for this webinar today. So if you do look down at the bottom, you can see there's a video player controllers. You can see you have those little icons at the bottom. You can look for a number of different resources. You have a viewer slide as well. You're going to be able to see slides that we will pull up occasionally. You should see myself and Shay on the screen as well. And if you continue on through exploring through the console, you'll be able to see other things such as tips how to watch other webinars. We have more webinars available. We also have questions or comments. You can ask those questions or comments. So that's what we're really going to enjoy today, because we're going to have Shay in the last half hour. We're going to go through some questions, conversation for about a half hour, and then hopefully the last half hour we'll be able to get to all of your questions. We'll get as many as possible. We have this hour-long session. And then take a look at the upcoming events down at the bottom. You can see there's a couple icons that will show you any of the upcoming events, or there's also a survey that we do want you to fill in. So just explore through this platform. We're trying to pull up some of the slides just to show you the available resources and things like that. So if we have the resources, we can pull up there. And we also have a few other things. We've got webinar and masterclass links. So there are other classes if you're interested in technical analysis, or if you're interested in options trading, other things that might be mentioned here today. We won't have time to go into detail on all some of the things that Shay may mention. She might get into some technical indicators and things like that. Check out our series of webinars and masterclasses that we have available for all those different types of topics. So that being said, let's get back to our conversation, Shay. I'm excited to ask you these questions, and really excited to hear what answers you have for our audience today. So first off, what made you want to start day trading in the first place?
At the time, I was fresh out of college. I was living in Los Angeles at the time, and my job at the time wasn't that stable. I was working in the film and animation industry. So we'll have work sometimes for 2-3 weeks and have 2 weeks of break. It's all on really short-term contracts. So I wanted to make some supplemental income on the side to pay rent, and to just be able to live, because LA is really expensive, right? So that was my entire initial drive to learn day trading. I thought, just like most people, I thought it was going to be very easy. I can make really fast money, make Lamborghini money really fast, but definitely wasn't the case, sadly. But that was the initial idea, the initial inspiration.
Nice. We all want that Lamborghini money.
Yes.
That's interesting. You're in the film industry, so now maybe one of these days we can look at making a film about the day trading. I know there's lots of really successful movies that way.
Yeah, that'll be fun, actually. I will fund it.
It sounds good. So how would you describe your day trading style, and how does it work just at a high level?
Yeah, so I'm mostly a momentum trader, meaning that I trade high volume, high liquidity, high range. So, whenever there's any hype stocks in the market, for example, last year in 2021, we have all the Wall Street bets movement, all the meme stocks, GameStop, AMC, BBBY. Those are the high volume, high range stocks I love to trade, both long and short. So that's kind of what I trade. So both on the small cap side and the large cap stocks. Recently, this year, I've been trading a lot of the tech stocks. For example, NVIDIA, AMD, just because they're so volatile, up and down. So that's kind of the style I trade.
Okay. Well, what I want to dig into a little bit further with you on that is, what are some of the must-haves when it comes to investment knowledge? So we have a lot of viewers, and we have clients that attend classes and things like that. And they want to know, what are the skills and what kind of personality and things like that would you need to become a day trader, a really active trader such as yourself?
Yeah, so I think to become a day trader, because I just want to make it clear that day trading and investing are very different things. Investing, you're kind of buying and holding, right, for longer term capital gain. For day trading, if you use all the skills you learn in investing, you're actually gonna lose a lot of money. So you kind of have to really realize that, okay, when you're day trading, you're not buying and holding for 2 days, 2 months, 2 years. You're literally buying the same day and selling it the same day. So you're taking advantage of the short-term volatility within a single day. That's why it's called day trading. So some skills and some personalities you need to have. So you need to be very patient as a day trader. You need to be patient, wait for your setups. Sometimes there'll be hours where I don't even take a trade, and there are gonna be other days where I place a trade right at the open. It's all about patiently waiting for your strategies and for your setups to show up. So that's very, very different from investing. Investing, you kind of just buy it and forget about it for the next 2, 3, 5 years. So it's very different. And also you need to be very disciplined in terms of day trading. You need to have a set of rules that you need to keep in order to obviously keep your trading capital safe. You need to be very detail oriented and do your research. And I think most of all, you need a really big appetite for risk. So for those people who want to just the lazier, well, not lazy, but this kind of the set it and forget it way to invest and let your money grow. Day trading wouldn't be for you, because day trading in itself, it's a whole business. It's a career. It's a very, very active job. So that's a really big difference there. But I would say day trading, you have to expect that you are gonna lose money the first 6 months to a year as you're learning to get into this profession, right? It's kind of like going back to school. You have to pay your tuition, so you shouldn't expect to make any money in your first year. But once you get through that, once you have a certain set of strategies and you learn all the rules we talked about, you learn strategies, you know how to execute your trades, then it's time to slowly scale up and eventually make money. Whereas in investing, you kind of just buy the stock and you expect longer term in the 5-year horizon. Hopefully the investment is positive, but it's a much slower growth. But day trading, you're going to be red to start, definitely. But once you get it, the growth potential is exponential.
Yeah, I've heard a lot there about the actual, you were saying discipline and patience, and almost seems like there's a little bit of a school of hard knocks there at first too, right? You're learning as you go. Is that correct?
Yeah, because any high income profession, like being a lawyer or a doctor, you have to go to law school, you have to go to med school. Everyone goes into a lot of debt, 6 figures in student loans debt to learn those skills. I'm not saying you need to do that for day trading, but you definitely need to pay and like lose some money to learn first. And that's what people need to that's the right kind of expectation. You need to pay your market tuition to learn the skill.
Yes, the tuition is definitely necessary. All right.
Mhm.
So we have, and that brings me to the question on, some beginners might want to quit their full-time job. They're seeing these exotic vacations and Lamborghinis we talked about, and dedicate themselves fully to learning how to day trade. Why would you caution against this approach?
Yeah, please don't do that. um, the best time to learn to day trade is when you're not worried about money. It's when you're financially stable, hopefully, with keeping a job, whether it's part-time or full-time. When I was learning day trade, I think I was able to keep going at it, even though I was losing money for close to 2 years. But it's because I still had my job at the time, even though I hated it. The pay wasn't that great, even though it wasn't stable. But I had that income to pay my bills, pay rent. So that's the reason I can keep on refunding my trading account to make sure that I really give myself the proper chance to learn and give myself the time. If you don't have any income and you just want to quit your job to day trade, I think that's a really, really big mistake. And a lot of people do that and they fail right away, and that's it. They don't have any money to trade with.
Great words of wisdom. And just to that note too, there's a quick note for our audience. TD Direct Investing, if you're thinking of going through there, paying that tuition and learning and getting that education, we do have a lot of free education, plenty of webinars, master classes, on-demand videos. So anybody that's a TD Direct Investing client, you can learn about technical analysis, fundamental analysis, understanding market developments. Check out the resources widget on the left-hand side in this console today for some of the suggestions, and you can also visit our Learning Center and web broker for all those existing TD Direct Investing clients, and you can browse that library, and then you can make that distinction of, am I a day trader? Do I like long-term investing? But the key is just giving yourself that foundational education for sure. So in addition to this, Shay, I wanted to know, so what sort of financial preparation do you think is necessary to eventually make the jump into full-time day trading? So what kind of money would you need? I'm sure it's subjective, but what would you suggest? Is there any rules of thumb there?
Yeah, ideally pay off any bad debt that you have. For example, like credit card debt, car loans, that's technically a bad debt. Mortgage, that's fine. I would pay off any high interest debt. And also, I think the most important part is you save up at least 6 months worth of living expenses outside of your trading account. At the time, for me, I saved that one whole year, but I'm just one person. At the time I was really, really young, like in my early 20s. So I just saved up my whole year of living expenses outside of the trading account. And also those savings are from my employment income. So that's another reason you don't want to quit your job. So save up 1 year, 6 months to 1 year of living expenses. And also like, have your finances in order, budget, making sure that you know exactly what you need to do for the next 6 months to survive. Make sure you have all the basic needs met, and then make sure you actually can finally focus on day trading full time. So give yourself that time, and obviously making sure that you have at least one or two strategies that are profitable for you to start going into full time with.
Okay. So having that emergency fund and making sure you have enough time to
Mhm.
allocate to getting started. Is there a, like a starter kit? If somebody were to sell a starter kit, how much would you estimate it costs? Like, what are some of the things you would need, and what are those elements you would want to have to get started in terms of maybe like hardware and what you want to have at home? Any suggestions there?
Yeah, so I know a lot of people ask me that because they see that I have two huge monitors. You don't have that, you don't need that, but I would say at least a PC laptop minimum, PC
Mhm.
laptop or desktop. No, you cannot trade on your phone or on your iPad. Like, it doesn't work. You need a proper computer, laptop, PC,
Okay.
not MacBook, because nothing runs on MacBook in terms of trading platforms.
Okay.
So yeah, so one monitor minimum, obviously, but I think it will be very helpful if you can, monitors. You can buy like a secondhand used monitor for like $50 now on Facebook Marketplace. So buy an external monitor. It's gonna help a lot because you can watch a lot more stocks at the same time. So that will be ideal. If not, that's fine. But yeah, just a laptop, um, one monitor external if you can, and a desktop broker platform. And I
Okay.
think minimum $5,000 in your trading account, minimum.
Right, right. So speaking on the topic of money, I want to try and maybe save some of our viewers a little bit of money. I have a son that's in university right now, and I know that tuition can be expensive. So going back to what you were referring to on that, you have to pay your tuition, right? You have that as you're learning, and that's to be expected. You're going to have some losses. How were you able to hone your trading knowledge and skills without risking a lot of money when you first started day trading? Is that actually impossible?
Oh, it's absolutely possible. So this is where, before in the first 6 months, you need to trade very, very small. So instead of risking $1,000, $2,000, I was risking $10, $20. So when I lose $20. It sucks, but $20 is very much recoverable. And once again, like I said, we're just taking the first 6 months to a year as your market tuition, right? You're paying that $20 per day or $10 per day to learn how to trade. So you are paying that
Hmm.
money to watch the stocks go up, pull back, watching that for a proper execution. You're practicing, oh, where is the best place to enter? The goal is never to make money in your first 6 months to a year. The goal is just to learn the proper ways to set up your charts, know what stocks relate to each other, know what to do when a stock goes against you, how to practice, stopping out, how to practice letting your winners run. That's all you're doing the first year. You're not going to make money. We established that. But you can really much control how much you lose that first year. If you're risking only
Hmm.
$10, $20 per day, you're not going to blow up a $5,000 account.
I never even thought of that on controlling the amount you lose. I like that angle
Yeah.
for sure. So, what does your average workday look like for you? Would you walk us through that process, Shay?
So nowadays, I wake up because I'm on the West Coast. So I wake up about 4:30 a.m. my local time. I kind of eat breakfast, stretch, exercise for about 30 minutes. So at 5 a.m. my local time, which is 8 o'clock in the morning market time, that's when I get to my desk, start looking through all the news, look at the charts, look at all my scanners, and pick out stocks that potentially interest me. So usually it starts with a list of 10 stocks, and I'll narrow it down to 4 to 5 for my watch list. So from about 8:30 market time, which is my 5:30 to 6 o'clock. That's the time where I actually go live with my community members, and I'll go over my plans for the day. Go over the all four of the watch list stocks. I go over the why, right? We need to analyze the news. We need to look at how it's gapping up or gapping down pre-market. We need to talk about the key levels on the daily chart and the potential setups, whether it's a long or a short. So that's all the preparation. It's in the first, sorry, I said, yeah, that 1 hour. So by 6 o'clock, which is 9 a.m. Eastern time, I'm pretty much done prepping for the day. So I have the next 30 minutes to just kind of observe and kind of see what else is going on and to get ready to place my trades after market opens.
Okay. Yeah, but once again, we always hear that all the time. You fail to plan, then you plan to fail, right? You have a plan every day, it looks like.
Yeah, every day. It should be because you want to make it so most of the decision making happens before you get into the trades, right? A lot of new traders, they get in the stock first and then worry about what to do after. You need to do the opposite. Plan out everything, entry, exit, risk management, stops. Do all of that before you enter the stock. You're gonna be able to do so much better as a trader if you do that.
Yes. Well, and I want to delve into that a little bit further. So, on the trading plan, so you mentioned this creating a trading plan for all of your trades. Why is this so important in your view, and what does a good trading plan look like? Are you able to give us a sample or an outline?
Yeah, so a good trading plan should be something where, let's say I'm long biased on the stock. Let's say if I'm long on a daily breakout, let's say the stock is breaking through daily resistance, so I think it's a long. So that's your plan, right? Your plan is if the stock breaks through that key resistance, then it's a long. So in reality, after the market opens, then you can watch whether the stock actually breaks through that key level you're talking about and pull back, consolidate, hold above that just hypothetically say $10 level and go higher. If it does do that, then that's a proper setup. Then you can actually go long on that pullback. But if the stock just pops to $10, rejects back to 9.20, then it's probably not a long anymore. Then it's probably a short. So it's important to have, essentially you want to know the perfect scenario of what your trade should look like if it goes according to your plan. And you need to know what it should not look like, meaning that you need to know when you should bail on the trade or you should flip your bias or leave it alone. So that's what a plan does. Essentially, you need to know the key level, long or short. You need to know what the chart should look like. You need to know what it looks like when it's successfully broken out and what it shouldn't look like, meaning that if it fails, then you shouldn't go long. So half of the battle in trading is knowing when not to place a trade. So that's why it's important to know that as a trader.
Right, okay. Knowing is always half the battle for sure.
Yeah.
We definitely know that. Well, speaking of which, I know I've watched some of your videos before, and you just made me think of the fact that I think it's something that's really important for viewers as well, especially any of those newer investors. You had mentioned in there, you were saying going long a trade or going short a trade. I think we have some slides on there that have some of those definitions, but can you help us on, because that's a really key element in day trading, on the fact that I think a lot of people think, well, if the markets are down, I can't day trade because, how would I make money if the stock's going down all the time? Can you help us, elaborate a little bit on that idea of short selling? So you were saying you go long a position and then maybe you can go short. So you can go in different directions within a day. Is that right?
Yeah, for sure. And I would say 2022, this year, has been really good for short selling because obviously market's selling off. So short selling means that instead of buying a stock from a broker, you're borrowing a stock from a broker to sell it to someone else. So I can borrow a stock from TD and sell it to Bob. So I'm shorting a stock that I don't own. I'm selling something I don't own, and I can buy it back lower when the stock drops from, let's say, $10 down to $5. Then I buy it back and I profit from the difference. So that's short selling. You're essentially betting the stock is going to go lower.
Okay. All right. Well, if I kind of go into that a little bit further, do you have a sort of research or preparation? So, if you're looking at, okay, I'm going to go long, you mentioned NVIDIA earlier, a stock like NVIDIA, I was going to go long in this instance, or I might go short today. When you're preparing your plan, what sort of research and preparation do you do to identify potential stocks to trade and the types of trades that might make sense in that particular instance?
Yeah. So what I do is I usually pick out stocks from like a scanner. So like the stocks gapping up or gapping down. But if it's something like Nvidia, which is a stock that generally just trades with the market, then I'll look at what the market sentiment is like that day. For example, this morning everything was really bullish. Nvidia was breaking out, AMD was breaking out, the entire tech S&P 500 is breaking out. So I follow the market, right? If the market is going up higher and breaking through all the recent resistance, and Nvidia tends to do the same, then I'll be more long biased. If I'm short Nvidia like a day like today, I'll be like jumping in front of the train. So I don't want to do that. So it depends on the stock, but for a stock like Nvidia, which really much follows the market, that's what I would be doing. I'll be seeing what the market's doing and looking to go long on Nvidia.
Okay. Yeah, that's something I definitely would consider the same thing. I like that idea. So there are times you've said you like to utilize price action versus using technical analysis too much, but you do use some technical indicators. What would be some of those in terms of what are some technical indicators you most frequently use as as a beginner to help you execute your trade? So those that are in the audience, what's something that they could use to help identify those trading moves?
Mm-hmm. So in the beginning stages, I tried out a lot of different indicators, but I find working the best for any newer traders who wanna try into try day trading. Volume is one. I use volume and I use like a volume moving average at the bottom of the chart. Yeah, that's what it looks like on screen. So at the bottom, there's the volume bars. I also use the volume average. I use the 13-day. And in the actual stock charts, I use VWAP, that pink line over there, volume weighted average price. So I use that to gauge the trend of the stock and also how strong the stock is, because it's taking into consideration the volume on the day as well as the price. So on the average, this stock RBLX, the VWAP on the day is 4240s according to that screenshot for that day. So as long as the stock is staying above VWAP and holding up higher lows, then the stock is trending. It's really bullish. The moment it breaks down and stays beneath VWAP, that's when I'll get a little bit more short biased because the stock is unable to hold the breakout, essentially. So I still use VWAP and volume. I don't use the other one as RSI. I don't use that one personally anymore, but it really helped me out a lot when I first started, which is the little bar at the very bottom beneath volume. So it measures when a stock might be overbought or oversold. So it's something you can use to gauge potential reversal on a stock. So I set it to 0 to 20 suggests oversold, meaning the stock has sold off too much. It could eventually bounce, but it could, right? It doesn't have to. 80 to 100 suggests the stock is overbought, meaning that it's spiked up too high and you can potentially get a pullback soon. So that's helped me a little bit when I first started trading. But I think in the beginning it's fine to use all these indicators, but eventually you want to focus on just the charts and the volume if you want to be a day trader, just to look at the price action.
Yeah, I believe the secret is to get started on these two, right? Using these and seeing what happens when you're using these different indicators. And as you said, with RSI, you may not use that any longer, but it's something
Mm-hmm.
that was part of your education and you learned as you were testing that out on the system. Is that right?
Mm-hmm. Yeah, yeah. At first you rely on them, and then eventually you try out. Okay, what if I look at it less? And because all the indicators are a little bit lagging, right? Most of the indicators are, and same as VWAP and RSI, but it still helps. But you don't want to rely too heavily on them.
Right, right. There you have it. There's Shay's. It was in 30 minutes or less to teach us everything she knows about day trading. I don't know if we got to everything, Shay. I know there's a lot more knowledge there that we didn't get today. That's
Right.
why we do have questions from our viewers, so you're all right to stay and answer as many as possible. Are you ready for that? Are you excited?
Yeah. Let's go. Let's see what
All
the
right.
questions are.
Let's see what we get. Okay. So we're going to put up some poll question. So let's see what we've got here. We've got a question that say, which would you like Shay to answer? So this is because we often sometimes get, hundreds and hundreds of questions from our viewers. We have our people in the background putting together some of the top questions. So if you guys can vote on those. So anybody, if you haven't started voting yet, out of our audience, take a moment to read those and see what you would want to consider as the most important question you want to ask Shay. So as an example, if you're reading down the list, what is your average hold time for a trade? For day trading, do you look at fundamentals or focus on technical? What are the best books on technical analysis and day trading? I really like that one. How long do you usually wait after opening before you take a trade? So after the opening bell, I believe is what they're asking. And do you consider dividends and dividend stocks when day trading? So we'll wait a moment here for your votes. So we've got a few coming through. And then keep your questions coming too. So as I said, we may not be able to get to all of them. We have about a half hour of Shay's time to pick her brain on whatever questions you have. And we'll get the ones that we think the audience is most interested in seeing. But yeah, put in whatever you like, and we'll see what we can get to. All right. So just as we're waiting for some of those polls to come through, I think I'm going to grab another question here as well. Let me see if I can get this. We have a question from Omar, which is, what were the most important lessons or tips that your mentor taught you? So we didn't even talk about any mentors. That's a great question. So what are some of the lessons or tips that your mentor taught you that you would have never learned or realized yourself?
Yeah, I think risk management is the most important thing about day trading, because I think most people did this, and I did too. In my first year, all I was focused on was finding that one perfect strategy. Finding a strategy that's going to work 100% of the time or 90% of the time. When in fact, day trading, I think this is also what my own opinion. I think what matters more in trading, it's not your strategy. Strategies are great. Don't get me wrong. I have a set of different strategies. I trade every day, long and short. But it's not what matters the most. What matters the most is risk management, especially this year. I know too many traders who have high win rate, but this year they don't have risk management and they lose everything. So risk management meaning that you control your risk. So something we talked about earlier, which is why I think all the beginner traders should start in the first year, is to focus on the risk management, how to stop out, how to make sure when you lose money, you're only losing $10, $20. And when you make money, your gains are 2 times, 3 times more than your losses. That's the most important thing to start practicing early on. With a small amount of money, just do it with $10. So when you lose $10. When you make, ideally, you let your trades ride out to make $20, $30. So I think that's the most important thing. It's not so much about the perfect strategy, the perfect indicator. It's about managing a risk and stopping out.
All right. So lessons learned from the mentor, for sure. All right. So we have a really simple question for you now, Shay. It's from Riazat, and he's saying, how many stocks do you trade in a day?
It depends on how many stocks are breaking out or have high volume or have good range on the day. So today I traded probably 4 different stocks, but there are going to be days where I only trade one. Last year was really busy. There are days where I have 20 positions. So it really depends on the day, on what the market's like.
Depends on if you want to keep your sanity too, right?
Yes. Yeah, it depends on if you want to go to bed or like go to sleep. If I don't want to sleep, just have a lot of positions.
Yes, you have to be able to sleep at night for sure.
Yes.
So if you can see on the screen on right now, we've got our poll results, and it looks like we've got some winners on the question. I would say there is a tie. Oh, there's a tie for sure. So let's go to the top one. So what is your average hold time for a trade? I like that.
Average hold time, I think I would say about 20, 30 minutes. Yeah, which is already pretty long for day traders.
Yeah, it's not very long. Absolutely. It goes quick. Speaking of which, since that was a quick answer, which I love, that we've got that other tie. Let's ask that one as well. So how long do you usually wait after the opening before you take a trade?
It depends on how the trades are setting up. For example, today I waited hold 30 minutes, but there are days where at the open there was a trade. So on average, I would say I usually wait 15 minutes. Um, but it's the same as the how many stocks you trade in a day question. It depends on the day. So today I waited probably 30 minutes.
Okay.
Yeah.
This is one question for me just to follow up on that is, do you trade in the after hours? Do you take part in the pre-market or the after session?
Not so much after hours, pre-market sometimes. This year pre-market volume hasn't been the best, so not a lot of trades pre-market this year. But I would say last year, oh my God, last year, instead of waking up at 4:30, I'll wake up at 3. So there was a lot of pre-market trading last year. A lot of
Well,
volume, a lot of range. This year, just waking up at 4:30 is enough.
well, that's another caveat for our viewers on the West Coast. You have to get up early to be a day trader.
Yeah.
Really early. All right, so I have one more from the poll that I want to take a look at is for day trading, do you look at fundamentals or do you focus on technical analysis and trends purely?
I would say for small cap stocks, unfortunately, the fundamentals doesn't matter as much. So small caps, I mostly just trade technical analysis and trends. For large cap stocks, this year the fundamentals does matter a lot. For example, right now we're in earnings season. So tomorrow I'm gonna be looking at Google and Microsoft. I'm gonna be reading into the earnings report and know the fundamentals of what they're projecting for next quarter. So that matters a lot if I'm day trading those specific stocks. But generally speaking, if my fundamentals matter less in day trading when compared to investing. Generally speaking, when the less time you're holding a stock, the less the fundamentals matter. But in day trading, I would say for large cap stocks at least, I still read into the fundamentals as well as the technicals.
Okay, so to dive into that even a little bit further, I've got a question from Darman that I think may apply to what you were just saying. So if you buy a stock and see the potential for the stock to continue moving higher, do you hold on or do you still close the trade at the end of the day? So does day trading lead to missed opportunities on, he's got on here on multi-bagger stocks. So I don't know if I've heard that term before, but I like it.
So for is he saying there's like a second day breakout potentially?
Yeah, I think he's looking at are you missing out on opportunities if you do close during the day? And I think he's also asking, are there instances where you may hold it longer than a day?
Oh yeah, there are. So I would say this year it's a bit tougher for swing trading. So what I used to do is, yeah, if I would close, let's say half a position by end of the day and hold on to the half for next day. You either have a huge gap up, continuation breakout, and sell into that. But this year it's been 50-50. I've been trying that out this year. It hasn't worked out the best. Whenever I swing stocks, I find the success rate of any overnight is less than 50% this year. So I'd rather just close it all out because you can look at it today. The market closed out nice, QQQ at highs, SPY at highs, and after hours, after Google and Microsoft earnings, everything just tanked. So this year is definitely a lot tougher to trade and to hold your swings. So for me, to answer that question, this year I'm okay missing out on some potential upside to protect my downside. So this year you have to play safe this year.
Right. Yeah, it depends on that environment. I agree.
Mhm.
Victor is kind of one of those situations where we mentioned fundamental analysis, that you do some of it occasionally. You said you may not all the time look at fundamentals. He's saying, could you trade without knowing what the stock is? So I'm assuming he's meaning you're going to know the symbol, but knowing, what do they do? What's their fundamentals? And could you just trade off of the chart?
Yeah, technically you can. If the chart is very clear. So let's say, a stock, for example, is going parabolic, there's a trade there. And I sometimes I usually still kind of check what the float is, what sector it's in. I still really quickly look. But technically speaking, some setups, you only need to see the chart to trade the stock.
Okay.
So
Just
yeah,
to
I'm not
elaborate
saying
on,
all
can
the
you?
time. I wouldn't say do that all the time. But if the chart is very clear, is clearly a dip buy, then yeah,
It can
I
be done.
would trade the stock.
When you say parabolic, what do you mean there?
So parabolic is also a price action term where the stock just goes straight up from, let's say, $1 to $2 to 10 to 20 with no pullback. That's parabolic. And they can do that for like 30 minutes straight, all going up, up, up.
Okay. All right.
Yeah.
And how do you identify resistance levels? This is a question from Ivy, which I think ties in really well right here.
Resistance levels are basically the previous areas on the chart. I usually look at a daily chart that the stock has sold off. So how do you identify it is to zoom out of your chart, go to the daily chart, scroll back maybe 2 months ago, two years ago, to find the previous areas where you have high volume on the selling side. On the peak, let's say a stock broke out to $30 and since then sold off to 20, then that $30 is probably going to be a resistance.
Nice. All right. So we want to jump back to the poll questions. I think we still have some poll questions here that we may be able to get to. So out of our voting, we have, these are new sets. So we've got our large caps only affected by institutional traders. That one didn't get quite as much vote. So down at the bottom, I have, what are 4 places where to look for stocks to trade?
I'll
Put
give
you
you
on the spot.
because I don't think you need 4. I'll give you 3.
It could be 3, I'm sure.
Okay. Yeah. So what I do is I have a stock scanner. Basically, you can look at all the stocks that's gapping up on the day. So by percentage, I just sort it by percentage and I see the volume. So for example, this morning, I believe, what's that stock was gapping up. And the GM was gapping up this morning. It showed up on my scanner, and so did Logitech, because they both have really good earnings. So I see that on my scanner. So scanner, that's the first place. Second place is just for news. So I have a news wire specifically for trading. So it shows all the major headlines. For example, certain stock is flying because they have FDA approval. So that's the news headline. I see the stock and look at it. Hey, I can probably trade it. So scanner, technically the gappers, news, fundamentally the news headlines. And third is sometimes I just look at ideas from my trading community. So I have a Discord community with a Humble Trader community, and we have a lot of traders throwing up ideas there. So I look at it. I know that trader is really good at going long. Then I see he has an idea ABC, and I'll look at the stock. Oh, maybe I'll join it for like a long on the dips. Same thing on short selling. We have a lot of really good short sellers. I see them mention a penny stock, ABC. I look at it. Okay, I really want to short it as well. So those are the 3 top places to find stocks to trade.
All right, we got 3. That's good enough for me. So we have the scanners, and then you had news, so like a streaming news portal. Like we have those within our Thinkorswim platform, for example, and the scans as well in WebBroker and Thinkorswim. And then lastly, you're saying any kind of community as well. You can get some ideas from your community personally, right?
Mm-hmm. Yes.
All right. So we also have, let's look at one other question in the poll here. So what is the average percentage to make in a day if you're going to end up working from home as a day trader?
Doing homework, or does it just mean working from home?
Yeah, I don't think they mean doing any homework like schoolwork or anything like that. I believe they're saying, to get yourself home as a day trader is what my interpretation was. What kind of percentage would you need to be able to, I guess, go to that earlier question, to be able to quit your job and make it as a day trader?
So percentage is tough to say because I can say it's good to risk only 1% per day. So 1% of your entire account, that's your risk for the day. About how much money you can make, it depends on what the market gives you, right? Some days you risk 1%, so you can make 2-3%. Some days it sucks. You risk 1% and you really do lose 1%. So it really depends on what the market gives you. And percentage is different, right? I can be trading a 6-figure account, 1% is $1,000 loss. That's fine for me. But somebody else can be trading a $10,000 account, and 1% is $100. So it really depends on what kind of capital you're working with. But I would say if you wanna, at least for me, when I started making a full-time income, I was trading with a $20,000 account, $20,000 US. But again, you don't start having a $20,000 account. You start with 5,000, slowly build it up. You may lose some, but eventually you want to work towards having that $30,000 account to trade with.
Right, right. So when it comes down to income, I know we were asking that question in terms of percentage. Did you have
Mhm.
a time when you were as a day trader that you looked at, okay, I need to get this amount of money, maybe just to replace your daily income or your weekly income? Did you have any scenarios like that at one point, Shay?
Mhm. Yeah. I was making around 2 times my income from work, but I wasn't making that much money from work. So this, yeah. So when I was starting to make 2 times amount of what I usually make at work, then that's the time to start prepping for me. At the time, I was saying that, oh, I was consistently doing this. Now it's the time to start saving up that 1 year of living expense. And once I saved up and I'm still doing well as a trader part time, then I was ready to quit to become full-time trading.
Okay. So we have one of these analytical questions from, it looks like Su Lung, asking, in one day, how many transactions will you trade in and out?
I hate to say it again, but it also depends on the day. So, for example, today I probably traded 30 different trades today. So that's 30 different transactions, buy and sell. So that's today. But I know yesterday I traded a little bit less. Yesterday, I think I traded only 10 different transactions. So it's 5 buys, 5 sells. So it really depends. Last year, there are days where I trade like hundreds of transactions in a day.
Okay, so on those transactions, so Ginny has a question that relates pretty well to this. Is it with one stock do you focus on, or do you trade multiple stocks? Like how many would you typically venture towards in a day?
So for example, today I traded 4 or 5 stocks. So there are some stocks I've scaled into one, some stocks has about one entry out. Yeah, but there are days where
Okay.
it's so slow that I just trade one ticker and one entry in, one entry out, and that's it.
Do you follow your, this is another question from Victor that I just noticed. Do you look at your profit and loss while trading, or do you just make sure you execute well?
So I think it's a good idea to hide your P&L window at the beginning. I think it's a good idea. That's a really good idea, and I did that too. But after a while, it just makes more sense for me to know exact because you have to understand like if well, if you're trading a larger account size, at some point you need to care about how much unrealized you're in. So nowadays I do look, but I do look just to know that okay, I need to take care of my risk, how much money I'm about to lose or make. I need to take care of that. So I do keep it there, but not to. But right now I keep it there because it's not gonna. I'm not gonna make any irrational decisions just from seeing, let's say, $1,000 red unrealized. Nowadays, for me to start realizing, okay, I need to have to scale out or add into my position. So nowadays I do keep my P&L up, but in the beginning I would avoid it because it used to make me really emotional. Now it's not about the emotional side; it's about okay, what I need to do to reduce the risk, to scale up or size down.
Right, right. I know I would never ask this question of my wife, but Michael's asking me to ask you this question. How often are you wrong?
Every day. In trading, you're not it's impossible for anyone to be right 100% of the time all the time. So that's why I said it's okay to be wrong, but when you're wrong, I want to lose very little. So I can be wrong, but I lose only $100. But when I'm right, I want to make $300, $500. So it's fine. Like today, I was wrong on a couple of other stocks, and that's fine. I took it for a loss, but I was able to make the trades work for the ones that I'm right in and capitalize on that. So in trading, it's not about never lose money. It's about making sure you only lose a small amount when you lose. Let's say $10, like we said earlier. But when you're agreeing, when you're right, you make $30, $40. That's what trading is about. It's not about being right all the time. Because my win rate is only 60%. 60% win rate, that means on the 60% of the time I make money, the gains are 2 times, 3 times more than 40% of the time where I'm wrong.
Yeah, and making those mistakes is part of that tuition we talked about earlier, right? You definitely learn from your mistakes,
Yeah, you
for
have
sure.
to.
Anybody out there sports analogies? If you're a baseball fan, like a Hall of Famer is somebody that can hit the ball hit a home run 3 out of 10 times, right? So if you're only right
Yeah.
a few times, that definitely helps. All
Mhm.
right, so we have another set of polls coming up here. So some results that we're showing on the screen now. So let's take a look at the most popular one there. So what is your stop loss strategy? So like if you can explain to the group too what that is. What is your stop loss strategy? Manual or trailing is what the question is.
Yeah. So usually I do manual. There are only specific setups where I let them trail. So most of the trend joining setups, long or short, I'll let them trail. But if it's a lot of the momentum strategies, I like to be there to either stop out or to take profit. So it depends on the setup. I would say most of the time it's manual. Unless I'm letting it, I have to step away. I have to have a market stop to stop out of my positions.
Okay, so you're using a stop market. So you're either there doing the trade yourself, where you're going to just close it out, like I've seen you do that on some of your videos. Close it out manually is what you're saying, or you might use just like a stop market order if you didn't have that time to be sitting there manually and you were worried about a drop. Is that correct?
Yeah.
All right. So, what's your opinion on options trading?
I think it's fine. It's not. I know it's not for me, but I think my opinion of options is, I think you need to. All the best options traders I know came from stock trading, so at least they know how to read the stock charts. At least they know how to, how to see when a chart is bullish. That's the best options traders I know. The options trader I know where they don't even learn about charts. They just don't jump straight into options. And unfortunately, last year it became really popular with the Wall Street bets YOLO calls they call it. Unfortunately, last year it probably worked really well, but most of those people this year they blew up. I think options,
Yeah.
I think it's fine. Like if you know how to trade it, trade it. But I would say it's riskier than trading stock.
Yeah, it takes a lot of knowledge on the options end. You should learn. I think you're right. Learn that foundation of stock trading, then move on
Mhm.
to options. But yeah, that was a great question. On should I get a coach or find a system online? That's the next kind of most popular one on the poll. Or should I just try random setups to start?
So I think it's okay to just try it out in the beginning. But I think what you're gonna find is that nowadays it's not the lack of information, right, online. And you go on any YouTube video, you can find someone else's strategy, or you can find, like you said, a random setup to start. But but why trading is so hard nowadays is because you don't have a structure. It's hard to find a structure to go step by step from. A strategy can be teaching you, let's say I teach you a parabolic short. How are you going to know what a parabolic short is if you don't know how to read the chart? So knowing out there is going to give you that system step by step, unless you're in an actual program. So I would say, try out the random stuff online. I have a lot of free YouTube videos for you to start, but I have a playlist in the order I think people should start. You can start with that if that's what you like. But I would say, in the beginning stages, a lot of people they get lost because there's just too much information, right? You don't know how to go from point A, B, C. Instead, you can be starting from, E, F, Z. So that's why it's hard in trading. There's too much information out there, and I'm not saying my videos are gonna be the answer, but I would like to think that okay, I think I have a lot of beginner-friendly videos in a structured way.
So that would be under, is it Humbled Trader? If you just looked on YouTube, typed in Humbled Trader, is that where you would find that list?
Yeah, so if you go to my YouTube channel and go to playlist, there's day trading for beginners playlist, and then it should be in the order that I think people should watch.
All right. So going back to Reddit and Wall Street Bets, I'm kind of glad
Mhm.
you mentioned that because this fits in with a question from Sheila saying, have you ever shorted a stock that went the opposite direction? So a lot of people that if you don't know, there's that Wall Street Bets situation with GME, GameStop, where it went the opposite direction and went way up when a lot of the market was trying to, the big players in the market were trying to short that stock. Has that ever happened to you? Have you had that situation before, Shay?
Yeah, I got short squeezed. Yes, has happened.
All right. Can you elaborate on that just so those that may not know what is the short squeeze? What happens in that situation?
So a short squeeze is, so for example, short selling, I'm shorting a stock at 100, let's say, thinking it's going down to 90. So if that's the case, if the stock does go down to 90, then I profit the $10 difference, right? So if I'm short $1,000, I make 10,000. If I'm short $1,000, I make $10,000. Sorry, I had to do the math. Yeah. So,
Yeah.
but if the stock, instead of going down from 100 to 90, it goes to 200. Let's say it does that. And let's say for some reason I don't have risk management, I don't stop out, then I lose $100,000 on that short. So that's why short selling is risky because technically your risk is infinite, right? When you buy a stock at 100, the lowest it can go is zero. The worst you can lose is $100 on one share of a stock. But if a stock short squeezes and goes to the 100 to 500 to 1,000, my risk is technically infinite. So that's why it's risky. That's why if you want to short sell a stock, you need to be really good at managing your risk and stop out of your trades.
Yeah, that risk management comes up a lot. It is definitely a really important thing.
Mhm.
That brings me to our last question. I think we're going to be able to squeeze in here within the time. You've been so great, Shay. I really appreciate all this. What is your top advice for a beginner? And this is a question from Muhammad.
My top advice. Okay. Not advice, my opinion for beginners. My opinion for you is if you're really serious about this, I mean, first of all, I think let's say everyone here is interested in trading. I would try out all the free resources you can. So sign up for a free paper trading account. I know TD offers it. A lot of other brokers offer it. Sign up for a free paper trading account. Watch the free videos on my YouTube channel. You're not gonna lose any money that way. Watch the free YouTube videos. Try it out on simulated trading. That's paper trading. So you're trading fake money essentially, and see if it's really for you. Try it out first, and by that process, I guarantee you, 90% of the people here will be thinking, "Oh, this is too much work. It's not for me," and that's fine. You're not losing any money. You're just losing time. That's fine. So I would do that first, right? Making sure this is actually something you want to do before you commit to paying any money, market tuition, or signing up for brokers or anything else. So that's the first step. And then, once you have those paper trading account, then, try out some strategies online. Pick one or two strategies you either find online, or you can, consider joining a community like my community, for example, if that's what you're interested. Because then you can trade along other professionals and you can learn how to create your trading plan and to eventually make your own decisions. That's what I would recommend. I would be very careful about people who live stream online, whether I don't live stream for that reason, whether it's free online stream or paid streams, I'll be very cautious on those ideas. I got sucked into those in the beginning. I lost a lot of money, essentially buying and following alerts. I'll be very wary of that. But day trading is trial by fire. You're gonna learn what works for you and what not to do, hopefully.
All right, there you have it. So you can try a paper money account. So paper trading, those if you don't know what it is that where you can do some fake investing. So you're using the actual real market, but you're just doing it on a paper basis, right? You're just doing practice trades. We do have that available with Thinkorswim Canada. So if you type in Thinkorswim Canada in Google, you'll get the link right away. It should come up on the top, and you can download the Thinkorswim paper trading platform as well to do what Shay had just mentioned there. So definitely encourage you to take a look at that. Yeah, there we have the link for that platform available for you. And then as Shay was mentioning, check out those videos. Check out Shay's Humble Trader videos. Do your research. Check out the Learn Center in Webbroker. And there's a lot of great technical analysis webinars that you can watch that we have available, and all kinds of masterclass live content and other webinars like this that we just did today. So thank you so much, Shay. Just a reminder to everyone as well that there is a survey that we have. I don't know if we have a link that we can pull up here. We do have a survey link. Yeah, there it is. You can see down at the bottom. Click that icon for the survey link in the middle. I believe it looks like just a little clipboard. We want to get your opinion, what we did well today. I hope you really enjoyed Shay's answering of all these great questions. And we really appreciate your time, Shay. Thank you so much. Hopefully, you have good trades over the next remainder of the week. And anything in closing from you?
No, thank you everyone for joining. If I missed your questions, you can comment them in my YouTube comment section in my videos, and I'll try to do my best to answer your questions.
Excellent. Well, thanks so much, Shay. It's been a pleasure. I'll definitely be checking out some of those YouTube videos, and I'll put some questions in there for you too.
Okay.
All right. Thanks so much, everybody. Have a great day. We'll
Thank
see you next
you.
time. Take care.
Bye.